Hello everyone, welcome to the channel of Trigonometry. Today is August 1st, Saturday. I am making a weekend summary video today, and I'll be sharing my P&L at the end of this video, and I'll be sharing what I did this week, my trading strategy, and my outlook for the next week. Now let's get started. So at the start of the week, followed by the ceasefire mediation hope over the weekend, stocks opened higher on Monday. As you can see, on the 27th, Monday, QQQ opened up around 691, 692. However, the higher open only lasted minutes, which was very surprising to me. So last week, I called out the bearish setup on QQQ, SPY, and IWM. And I thought we would get a nice bounce first to test some of the resistance right around this moving average before going lower. But the Monday rug pull caught me off guard. This is one of those situations where even I was right and I was wrong. I can still lose money when I was right. And this market is very, very difficult because we have so many factors at play at the same time. Even though it bounced a little bit, it really never reclaimed this moving average at 20 period moving average. The news on Tuesday was that the famous Citadel came out on Tuesday saying that they expect the Fed to hike interest rate by 25 basis points. And then the market dumps again on the fear that Fed will hike rate. And then Wednesday, FOMC, we get another dump at the open. And at the middle of the day, and when the Fed came out, says they will keep the interest rate unchanged, market rallied all the way to test this 50 period moving average, and then rejected right at the resistance of the 50 period moving average and rejected all the way down to break the low of the day. A very, very bearish close. The first 3 days of the week are extremely bearish. Nothing says it's going to bounce anytime soon. And then on Wednesday after close, we had Microsoft and Meta earning, and then Microsoft delivered a good earning and Meta delivered a bad earning. So those two kind of canceled out, right? And overnight, Korean market was basically kind of flat. It had a initial pump, then come back down to close basically flat. And then there were a lot of back and forth in the overnight market. Then Thursday morning, news came out that Leopold's Situation Awareness LP, for people who don't know, the Situation Awareness LP, it's a $40 billion hedge fund that was extremely successful betting on AI trades like Bloom Energy, Sandisk, Nebius, and many others. This hedge fund got liquidated on Wednesday because they used 4 times leverage. And Citadel, the very famous Citadel, who came out on Tuesday, said the Fed was going to hike interest rate. That Citadel bought the entire portfolio at discount from Situation Awareness. Now you start to connect the dots. Why Citadel came out on Tuesday right before FOMC saying Fed will hike interest rate, but in reality, it was almost impossible for the Fed to raise interest rate, in my opinion. Now you think about why did they say that, right? This happens on Wall Street very, very often. Like these market makers, the brokerage dealers, they know basically all the big positions from all the big money funds. When they know a hedge fund is in trouble because of leverage, because of margin call, it's like the sharks seeing a drop of blood in the water, and you see all the sharks is coming to hunt for the blood. They smell the blood of the whale. They smell the situation awareness hedge fund about to be wiped out by the market. It's in their best interest to make sure that happens. I know it sounds very brutal, but this is the reality on Wall Street. When they know you are heavily leveraged and you are very close to getting margin call, you are absolutely getting that margin call and you're absolutely going to blow up. This is exactly what Citadel did on Tuesday and Wednesday. Tuesday, they scared the market saying the Fed is going to hike interest rate, and on Wednesday, they took over the entire portfolio of the hedge fund on discount, pennies on a dollar. They wiped out this entire hedge fund public stock holdings. Now, the only thing left for this hedge fund is that they had Anthropic's private share. So they get to keep that. And because Anthropic was up a lot this year, so on paper they still have a paper gain of roughly 80% because the Anthropic private share was up over 600% this year. So on paper they still have 80% overall gain from this hedge fund this year. But their public portfolio or the public stocks they're holding goes to zero. That's what happened. It's quite fascinating. But this Leopold guy is being worshipped as this one genius investors that sees the future, had made thousands of percents on Bloom Energy, and many other stocks got liquidated overnight because he didn't understand how finance work. He didn't understand the risk associated with leverage, especially 4 times leverage. When you have 4 times leverage, it means that your stock only need to pull back 25% to wipe out your entire portfolio. And that's exactly what happened in July. Some stocks pull back more than 50% in his portfolio. Right after the liquidation event on Thursday, we get a huge bounce in semiconductor sector. Stocks up 8%, SMH up 7%. A lot of the semi stock were up over 20-30% in a single day, which is absolutely crazy. And also at the same time, fueled by Microsoft earnings beat. Microsoft stock was up over 15% in a day, which is pretty crazy. And on Friday, the big news was US Treasury is going to buy yen to help Japanese government to stabilize the currency, because the Japanese government was selling US Treasury to buy yen. So basically, I think what the US Treasury Department did is trying to, instead of selling US Treasury, they're selling euros to buy yen, which helps stabilize US Treasury yield. As you can see, the US Treasury is being sold off very sharply in the past few days. You see a very sharp decline in the after FOMC on Wednesday and Thursday. Thursday another drop, and Friday another drop. So a very big drop. And this level is, I believe, the lowest level in many years. Yeah, this is the lowest level since 2007. This is very, very rare to see TLT at this level. I think U.S. Treasury is going to do something to stabilize the Treasury yield at this point, because it can't get any lower than this. If it goes any lower than this, we're going to have a big problem. I do believe in Scott Bessent. I believe he is going to do the right thing to stabilize the Treasury yield at this level. I think selling euro is one of the strategies he's implementing right now. I have a lot of faith in Scott Bessent because of his background with George Soros, and they shorted the British pound back decades ago, made tons of money. He understands foreign exchange, he understands currency, he understands the treasury bonds very, very well. So I think he's in a great position to stabilize the U.S. Treasury. I think he has a variety of tools to do that. And another under the radar news is a potential removal of U.S. debt ceiling. This could be a very big bullish catalyst for the stocks and the bond market, because once you remove the debt ceiling, it will enable U.S. Treasury Department to issue more debt without worrying to triggering the debt ceiling. And also at the same time, there will be complementary measures to loosen the regulatory conditions for the banks so that they can release more capitals to support the bond market. I think that's the next step. But I think all of these measures go hand in hand. At some point, I think they will start to make this work. And I also believe that could be the last piece before the Fed actually lowers the interest rate. Even though the new Fed will not increasing the balance sheet like the previous Fed, some people are talking about Fed is going to tighten the balance sheet, which I do not believe there is a chance right now for Fed to tighten the balance sheet, not in this market condition. But at some point, when there are enough liquidity in the market, there is some opportunity to tighten the balance sheet, but not at this moment. I believe the Fed will only tighten the balance sheet when they first release or loosen the regulatory conditions for the banks and the U.S. Treasury Department, so they can issue more debt. There are more liquidity in the market. Then the Fed will start to tighten the balance sheet. So I think all of these moves go hand in hand. There are a lot of discussion regarding if the new Fed chair Kevin Walsh is dovish or hawkish. I do believe he's not that hawkish like many people think. I think he wants to lower interest rate. Even though he talked about previously to tighten the balance sheet, that was in the condition that there were a lot of excess liquidity in the market when the Fed was doing quantitative easing post the 2008 financial crisis. That's when he wants to tighten the balance sheet, but not in this market condition where there's very little liquidity. There's no point to tighten the balance sheet. Otherwise, there's going to be a major problem in the market. The Fed will be tightening balance sheet only and only if there's excess liquidity in the market. And that's my opinion. I wanted to briefly talk about the earnings. And Microsoft, obviously, they had great earning. But to be very honest, the number is good, but it's not this good, to be very honest. In my opinion, they had a great earning, but does it deserve to be up over 20% since the earning? I think this could be overrated. And they are right at the previous high at 464, like exactly the height. So there's no breakout just yet. After 2 days pump, they're still right at the previous high at $464 exactly. Why did I say Microsoft earning was not that good? Because I think this earnings number is basically pretty much in line with the previous earning. There was not much big of a surprise factor. The only thing that changed was they basically changed their accounting measures. So now the data centers that they're building, they're saying they can be used for 30 years instead of 20 years. By making this change, they're basically changing the depreciation formula of their assets. So previously, their asset can be depreciated over 20 years. Now they can be depreciated over 30 years. So it means the depreciation cost per year or per quarter is reduced. So it basically effectively increased the cash flow on paper. But actually, the business itself did not change that much. It was not really a surprise factor. But on paper, it kind of manipulated the accounting measures to make the cash flow look a little better, if you understand what I'm talking about. So from my understanding, the business of Microsoft did not see a material change or any positive surprise, in my opinion, in this earning compared to the previous earning. The only thing that was changed was the accounting measure of depreciation. So when the depreciation cost goes down, the cash flow or the income on paper goes up. That's the only change they're making. And the stock pumped 20% after earning. So I don't know. Do we get a rejection from here to come right back to fill this gap? It's very possible, right? Because it did exactly that the previous time. When you see, oh, it's breaking out, it's gonna fill this gap. Yes, oh, it's a breakout. No, boom, all the way down, straight down. You never quite see this in a stock like Microsoft. Like, it's when it's trying to break out, like it give you a complete fake breakout reversal and to go back to test the 52-week low. And then they're basically doing the same thing again. Is this gonna be another fake out? I don't know. I will keep this on my watch list, but I'm not so sure right now. I'm definitely not chasing Microsoft in any way. And a very similar story for Amazon. Amazon also pumped 15% after earnings, so it's not breaking out just yet, and the story is very similar. But granted, their cloud business did accelerate, which was great. I do believe Amazon did better than Microsoft, even though they also mentioned that the life of a data center is much longer than people were expecting. The life of a data center usage is closer to 30 years instead of many people think it was like 15, 20 years. That's also one thing they mentioned. And I believe Amazon cloud revenue growth around 37%, which is a significant acceleration compared to the previous quarter, which is good. So I think Amazon technically is better than Microsoft at this point. I also like the Amazon chart much better than Microsoft, but because it's much closer to the all-time high, but Microsoft really still quite far away. And then Google was the one reported earning last week. But technically, I would say Google's earning is not that much worse from Amazon. But why Google dumped 7% after earnings? I think this is also part of the Wall Street scare scheme that was trying to get this hedge fund to liquidate. So all the narrative from last week and earlier this week is basically trying to scare the market and get to as low as possible to force the AI trade to unwind, to force the liquidation. So no matter what Google said on the earnings call, no matter what number Google's giving, it's going down. But this week, it's completely different story, right? Google, you see here, Google is reversing all the way. It's now far above the pre-earning close, which is quite amazing. This week, Google is up a lot this week, and on Friday up almost 7%. So Google is like also reversing, almost breaking out of this descending channel. Very strong move. So I think this narrative change is very, very fascinating. So this is also one reason I don't often bet on earnings, because it doesn't really matter sometimes what you deliver on the earnings, but it matters more about the current narrative, what is going on right now, and what the Wall Street objective is, what they're trying to accomplish next. You can say it's a conspiracy theory, but I've been in this market long enough to know that Wall Street sometimes can spill some ridiculous narratives, like to make you scratch your head, like, well, what are you guys talking about? And then you found out later, they want to do this. That's why they were pushing this narrative. Okay, now I get it. So, and this is also one of the situations where when they are targeting this whale, trying to liquidate their position, everything has to fit their narrative, right? All the plays, all the big moves has to fit their narratives. Especially the earnings gap up and down, they can manipulate this very easily because the overnight volume is very, very low in most situations. If they wanted to move a stock down 5-7%, it's very easy. Even with a stock like Google, the overnight volume is very low. It's very easy to manipulate the stocks, and you see exactly where the stock bounced, exactly on the 200-day moving average. This is also very fascinating. Google, right? The first bounce right here on the 200-day moving average. Pull back again, another bounce at 200-day moving average. So that's the stock of Google. So next time when you see Google put a pullback to a 200-day moving average, you buy. It's that simple. I think Google is still the best stock among all the hyperscalers because they have the best search engine, they have the best video streaming service in YouTube, they have the best web browser, they have a duopoly in a mobile operating system in Android. They have their own custom chips in TPU, which also has external buyers, which means they have a chip business that is making money right now, which is the only one in among all the hyperscalers. And they have their own large language model, which is also the best amongst all the hyperscalers. So from all the AI stack vertical integration, Google is the best of all. And Google has a cloud business growing at 80% year over year. So I think it's pretty clear if you wanted to pick a hyperscaler, which one are you picking? So my pick is Google. I think it's very clear to me. Amazon is my second favorite, but they have a lot of overlapping business. So my core position is still with Google. I don't have any other hyperscalers right now. Google is basically becoming my savings account. If I have any doubt, I go to Google. And Google is also one of my liquidity pools. If I wanted to buy some other stocks, I sell some Google stocks and buy the other stocks. So, and it's been very stable and it's performing very, very well in the past few years. And Meta stock, not so good. Not so good. So they dumped the Meta stock. Even when they were pumping everything else, it had a bounce right here, but very, very weak. Because Meta delivered a really, really bad earnings. And they missed EPS. If you miss anything, you cannot miss EPS. That's the one thing, especially for hyperscalers and the big tech stocks. If you miss EPS, you get punished hard. Like this is, I think Meta deserved to go even lower. I think Meta deserved to go to below 500, I believe. Actually, Meta is already breaking down this rising wedge, a gap below, and then it's trying to retest the wedge. I think it's very likely that Meta is going to go lower to test the previous low of 480. In my opinion, I'm very bearish on Meta because of their business right now. Their ads business is still doing good, but their pace of increasing capex is much higher than the increase in their revenue, and that's a big problem. So to sustain the capex cash burn, you have to at least have a similar growth rate in revenue. So if your capex grow by 30%, your revenue also need to at least grow by 30%. If your capex grow by 40%, your revenue should also have at least grow by 40%. But for Meta, the capex growing faster than the revenue growth, and that's a problem. And that's the part Wall Street really don't like. And also on top of that, you miss on EPS. That's a death sentence for big tech. I don't know how low Meta will go from here. 400 is also possible. The next big support is 383, which is the previous high from 2021. I would not be surprised if Meta comes back to test 383 or 400 and consolidate around this level. but it will take some time for Meta to prove itself, to pick up the growth again, to show people they can make the money back from this capex. Otherwise, it's going to be very, very difficult for the Meta stock. And back in early June, when people were very excited when they see this a big reversal bullish candle and the gap up, I call this bull trap when this happened. I call bull trap here. I called another bull trap right here. And this is playing out exactly like I predicted. It went to test the 52-week low right here. And Apple stock not doing good. If you're just reading from the earnings report, there's really nothing particularly wrong about the earnings, but because it had such a great run before the earnings, so if investors cannot see any additional surprises, this is usually a sell the news event in earnings. That's typically what happened. Apple has been treated as a safe haven when the other hyperscalers are burning cash, but eventually stock will track their fundamentals. When they have fundamental regression, the stock price will follow. So that's Apple. My opinion on Apple is kind of neutral. I'm not a buyer or a seller. I don't know where Apple go from here. They will still have some things to prove. And they also mentioned they are experiencing very high pressure from the memory cost. And they're expecting the cost to last throughout 2026 calendar year. So how are they going to solve that problem? I don't know. So we'll see. Apple, I'm not touching right now. And then next week, we're going to have a lot of earnings. Monday, we're going to have Palantir. Tuesday, after close, we're going to have AMD, SpaceX, Arista Network, Stereolab, Zeta, Open Door. On Wednesday, we're going to have Eli Lilly, Shopify, Uber, and Sandisk After Hour, Western Digital, AppLovin, Elf, Mercado Libre, Redwire, Exxon, Beyond Meat. And on Thursday, we're going to have Datadog, Celsius, Pfizer, DraftKings, Airbnb, AAOI, Rigetti, The Trade Desk, Red Cat, MP Material. On Friday, we're going to have Oklo, Virtual Energy, and Under Armour. So a lot of very important stock will be releasing earnings next week. The two company I'm watching very closely. One is AMD, the other is Sandisk. I think these two stock will determine the fate of semiconductor sector for the entire week and possibly the entire Q3. So why do I say that? Sandisk, we all know the story of Sandisk. It was up like 6,000% in 2 years, which is absolutely ridiculous. But it did keep putting up these amazing numbers. Their EPS, their revenue up over 200% year over year, 300% year over year. They keep putting up these amazing, mind-blowing numbers. Will they stop putting up great numbers this quarter? I think this quarter is going to be even better than the previous quarter because as according to their Q2 guidance, they guided the revenue growth, I believe, up over 300%. and their EPS is up over 1,000%. I don't know. Can their stock? I think it will be very, very difficult for their stocks to go down if they beat their own guidance again. So I think Sandisk might be able to turn the sentiment of the entire semiconductor sector. And we already seen SK Hynix and Samsung and other memory stocks put up amazing earnings. So we'll see how Sandisk does this time around. I think the Sandisk number is going to be amazing. I think the Sandisk number can be even better than any of the previous memory stocks that we are seeing. I think it's going to be some mind-blowing numbers, but and I think the stocks is going to go up. And AMD, I'm most bullish on AMD, and AMD still remain the largest position in my portfolio. And even in this recent pullback, AMD is still relatively strong. If you look at AMD stock, yes, it was down on Friday and it was opened up like plus 5%, and it was down almost 2%, a 7% swing in Friday, which is pretty significant. But overall, if you look at the structure here, it's still within the top range. If I do a measure from the top range, so from the top at 585 to right here, even at the Friday close, it's down 18%, which is really not that much. If you measure by the low of the week, it's down 27%, which is also pretty low compared to the other stocks. Like when you see Micron and Sandisk were down over 40-50%. AMD only down 27% at the low from peak to trough. It's only 27%. Now it's only down 18%, which is really nothing. If I had a good earning, you can easily see all-time high again. So I think AMD at this position is still a very, very nice structurally. I think AMD structurally is still very nice. It basically reclaimed the rising channel right here. Back to why I am so bullish regarding AMD. So I believe that we still haven't seen the actual inflection point on AMD in terms of the earnings. Like we still haven't seen the earnings blowout in AMD. That 2023 Nvidia like earnings blowout is not yet shown in AMD just yet. Although we're already seeing the narrative change because of the CPU demand, because of the inference demand, because of the agentic AI demand is growing so fast. But it's still yet to be shown on earnings report just yet. And I believe this earning, this is the one. This is the one earning that AMD actually show investor the mind-blowing numbers, because we have seen a lot of new signals in the past few months that the CPU prices keep increasing, and they're saying AMD and Intel is going to increase the CPU price yet again in August. All of this is because of the crazy demand in inference and agentic AI. And the recent news regarding the Chinese Kimi K3 model that is using a lot of agentic workflows to deliver amazing result, competing against the top tier model from Anthropic and OpenAI. This is all because of agentic AI. And if there's any truth to that, we should see agentic demand continue to explode, and AMD will be the primary beneficiary of that. And on top of that, you remember AMD had a huge deal with OpenAI and Meta, and now with Microsoft and Anthropic. So basically, AMD has deals with every single hyperscaler outside of Google. We already know that AMD has deal with Microsoft, and now they have deal with Anthropic, which means they're gonna have deal with Amazon because Anthropic use most of their compute from Amazon. So in order to fulfill Anthropic's demand, Amazon kind of have to buy a lot more AMD GPUs. So basically, AMD is going to have a deal with Amazon as well. And then we know AMD also has deal with Oracle. So Oracle, Amazon, Microsoft, Meta, Anthropic, OpenAI, 6 hyperscalers outside of Google. AMD has deal with every single one of those hyperscalers. That is going to show up in the next earnings guidance. I firmly believe this is the quarter that AMD is going to have the blowout earnings number that shocked everyone. That everyone will have their jaw on the floor looking at AMD's earnings number. This is my bold prediction. I believe any dip in AMD stock before the earnings will be a great opportunity to buy the dip. I know it's very risky for me to say that right before AMD's earning. Basically, I put my credibility on the line. And of course, this is not a financial advice. I'm only showing what I did with my portfolio, what I will be doing with my trades. This is not any way of solicitation or investment advice. I'm just telling you from my experience and my research and my projection of the stock where I think it will go. But if for some reason their earnings did not show up as a big beat, you may see the stock pull back. Nothing is guaranteed, but I see this as an asymmetric opportunity to make disproportional profit if you are willing to take this risk right here. I will be taking a small risk with options to bet on the upside, and at the same time I'm willing to play on both sides. If I do see their earnings miss, I will have some protective measures as well, because there's a probability to everything, right? Even if you have a full house, your opponent may have a straight flush. But from the technical perspective and from the fundamental perspective, I think this is a very good risk-reward asymmetric bet that AMD will blow out this earning and the stock will go much higher. I think we may be able to see all-time high right after AMD earnings. Most ideally, 600 plus after earning. I think the probability of AMD not beating on this earning is very, very low based on the research I did. And overall, regarding the AI trades, I saw a lot of discussion regarding that if this AI bubble is burst, a lot of bearishness still in the semiconductor sector, and a lot of people saying it's the AI trade is done, it's going to rotate to other sectors. I completely disagree. I think not just AMD. I think AMD and Sandisk earning will turn the sentiment of the semiconductor industry, will turn everything around. And then you will start to see everything hitting all-time highs. All the semiconductor stocks that were previously aggressively sold off, all of them will start to see all-time highs. At this moment, I see 0 people on X talking about a V-shaped recovery. I am calling a V-shaped recovery in all of the semi stocks. All of them. Those were down 50-40% in July. All of them, I'm calling a V-shaped reversal to break all-time highs. So finally, let's take a look at my P&L. This week, I was still slightly down because I have a lot of position in semi, and even after a Thursday bounce, most of the semi stock are still down for this week. So you still see my position is still down a little bit, but I'm not too worried. So in the past 1 month, so my account is only roughly down 11%, which is not that bad, to be honest. I know a lot of people have down more than 30, 40, 50, or even 70, 80% in July. My account is only down 11%. At the worst point, it was down over 24%. So now it's down only 11%, which is not that bad. So year to date, I am still up 49%. All time, I'm up over 687%. And my Roth IRA this week, I am up slightly actually. I am up over 1%, 2%. I would consider it as close to flat. In 1 month, only down 12%. So not that bad. Year to date, I'm still up 88% in 1 month. And all time, I'm up almost 5,000%. That is all for today. If you would like to see my most recent updated trading strategy, live market analysis, and my trade alerts, please come join my Discord channel. If you enjoyed this video, please like and subscribe. And I will see you next time. Bye.